Alright guys, welcome back to a new video. Today I want to give you my recap from Friday. I took one trade. It was on a combine, so you can see no funded account today. You can see I made $1.5 thousand. The reason for that is because on Topstep you have a consistency rule for 50%, so you're not allowed to make more money. So I had to close my trade, but yeah, I catched a really good short, so I was able to almost short the top here, and I closed my trade here. And yeah, today I just want to explain you why I took this trade and yeah, how you can copy this and yeah, learn for the future. So at first I just want to delete the chart, and what I do when I start into the day, I want to check out the daily buyers. And what I do, that's pretty simple. I just look on the daily chart and I'm trying to analyze the trend. So at first we had the Monday open here. Monday was here, and you can see we had a really strong, not a pump, but we had a bullish structure here. But what made me still bearish was we had this swing here. So what I always look for is at first the general swing, so the general trend. You can see it was clearly bullish, but we had one swing here, and that's the second aspect. And the swing is just simply when the daily candle opens up, or any candle, and sweeps the previous day high and still closes red. And that's the case here. So I was like, okay, maybe we can see a reversal. Also, what was really nice in alignment, we had a lot of lows here that were not taken, so we had a lot of liquidity to target. So yeah, I also call this stacked liquidity. So for me it was like, okay, there can be still a nice potential to short this, and that's pretty, like, that's simply it. Like, this was my reason to look for shorts. And yeah, but now let's get back on the 50-minute chart. I think this is the easiest way to explain it. So you can see here the swing again. The previous daily high was here. Oh no, where was it? Yeah, I think somewhere here. No, exactly, it was here, and yeah, this day swept this high. So, and also I think this setup here was a really nice short setup. Also one of the reasons, I think now I can get a little bit more into detail. So at first, I think the 5-minute chart is a lot better. So at first, what was I looking for? So I always start trading at 9:30. So the open was right here. You can see this. And what I really liked was this stacked liquidity. So we had Asia highs here and London highs here, and they both were not taken out. So this was a interesting zone for me. Also to look for longs. I mean, I was not only looking for shorts. It depends what the open is doing. I'm just going to mark out this zone here. And I was like, okay, like here was the open, and let's imagine like this open went down at first. I would look for longs, because this is still a target. Price wants to sweep, but yeah, that was not the case. So price decided to sweep this at first, and I was like, okay, there's no target to the upside. I want to short from here. And what I also took, because once I realized, okay, price is moving up, I started to draw out standard deviation. This is this tool here. And what it simply does is you measure the manipulation lag of a move, and you get prediction levels where price could reverse. So for example, you longed from here, you want to close at the -4 level, because the -4 level, this is my target. And you can see we perfectly hit the -4 level, or almost. And then we got the reversal. So, but I was not in here in a long position, so I was like, okay, I want to see price hit -4 level, and then I want to see a market structure shift on the lower time frame, and that's what we got. But yeah, so now I want to go on the 1-minute chart, because my entry was on the 1-minute chart. And what I simply want to do is, I think we should go in the replay mode. I just want to do it from here. You can see I also use PO3, and so price was pumping up, and I wanted to see price hit -4 level, and that's what we received here. And then once we see this, I just wait for the first market structure shift, and that's simply the first inversion fair value gap. So I was drawing out this fair value gap here, and we want price to ignore it, and that was the case here. But the problem is you can't really enter on a candle like this. So I still placed my order here, but at this point I target, So I was like, okay, we have here 2 resting lows here. So I was like, okay, I want to target these lows here. And you can see this was a perfect 4.5 hour trade. But let's get back to the price action. So, and that's what you also want to see. You want to see, and this is the hourly chart, and this is how I use PO3. We can see like the 3 a.m., the 9 a.m. candle opened up here. This is the 1 minute chart, and we literally have almost no risk to the downside. And the chance that a candle is closing like this is really low. Like you always want to see a manipulation, wick. So for me this was really unrealistic, and you can see we swapped the previous hourly high, so we swapped the 8 a.m. high here. So I was like, okay, this is likely to reverse. But now price decided to pump back up. So this made me, to be honest, a bit less confident, because you can see the hourly candle is going up again. But I had my order here, and then we had the 10 a.m. open here, and you can see price perfectly swept this inversion fair value gap. We got into the trade here, and then you can see price was ranging a bit, but then I think TP hit, and that's simply it. This is how I trade. This was my model, and I think you can also enter on this one here, because let's imagine you were not able to take this trade. I think there's also a second chance. So for example, we had this here, so we swapped this high here. That's what we wanted to see. And then the second thing is same here, first inversion fair value gap. Okay, so this time we had no retest, but if you can also go on the 30-second chart, or I don't know, let's see if there's something on the 3-minute chart. So for example, you can also take this inversion fair value gap. The problem is, I think you have a really large stop loss. But let's see how it looks like when we do it like this. Okay, I mean, you can also go for this low here, but you only have 2 hours, so I think it makes a lot more sense to go on the 1-minute chart when you perform this model. But that's simply it. If you have any questions about this, just let me know in the comments. And also what I want to mention, I have a PDF here. I can't open it right now, but if you want this PDF, just like the video, and see you next time.